While digital asset institutional adoption is accelerating through broader market integration, widespread scaling faces structural hurdles. Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Constantin Kogan, General Partner at Holistic Capital, Yat Sui, Co-founder and Chairman of Animoca Brands, Kaledora Liernan-Linn, Co-founder of Ostium, as well as Bart Smith, Partner and Managing Director at Performance Trust Capital Partners. We're here to discuss how digital asset market structure could evolve as institutional capital continues to scale. It is great to have all of you with us. Lots to get through. Welcome to MarketSite. Constantin, let's kick this off in terms of digital asset market structure. What are your higher level thoughts in terms of where we are right now?
I think we're in a great space right now. Like the Clarity Act hopefully will be accepted soon. We have a lot of new products like ETPs, ETFs coming in. Like, just the net inflow of capital was about 50 billion plus. And I think the institutional adoption is there. We see JP Morgans of the world, BlackRocks of the world are creating more, digital asset strategies. They have their own new funds that are coming in. We have a lot of stablecoin processing volumes coming in. Just the entire transaction volume last year, 2025, was $33 trillion. Think about it. The entire market cap of stablecoins is $300 billion, and we have like incredible amount of stablecoins processing. I think they play a huge role in remittancy space. We've been talking about it just before the start. It's like only 3% of the global market as of the moment. And I think for the global markets, not in the US, but for the international community, they are playing a pivotal role.
Yeah, certainly. And, yet, of course, we look at it through a different perspective when it's more US or Western centric. But at the end of the day, the infrastructure, the underlying technology is here to stay.
Absolutely. I mean, right now, Asia represents the largest number of crypto users in the world and continues to grow not just by population, but by adoption. In many ways, you could say it's the countries like Philippines or Indonesia or Southeast Asia that actually really have the best need for that technology. Whereas I would argue that particularly for retail in places like the West, it's a little bit more speculative because it's not obvious to them. Sort of why do I need a stable coin? Whereas in other places like in the Philippines, stable coins actually would be something that is very, very fundamental for them because that's how they get payroll on a daily basis. But the other big trend that we're seeing obviously is RWAs. Institutions are loving this idea of being able to sort of offer their institutional products to a wider audience. Sort of a topic that's not often discussed is there's like 150 to 200 or 250 million people, depending sort of how you measure it, of people that are all over the world that are not banked in traditional ways that can now potentially buy these type of products. So again, there's a market expansion opportunity. But I think talking about market structure, institutions are in, but retail is kind of on the fences at the moment because of last year. And so I think if there's a recovery on both of these, as in institutions are still here, which will be the case, and then retail starts to come in proper, then I think that's when we'll see, a much broader recovery than we've seen so far.
Yeah, and Kaledora, you share the same view as well, where it does provide access.
Yeah, I mean, I think from a high-level perspective, the last year has really validated our core thesis when we started the company, and we see the biggest opportunity in blockchain or DeFi as being basically extending access for the markets the most liquid global markets in the world that are working and functional. And from sort of a Western perspective, as you said, I want to echo exactly what you said, which is that the demand is a little bit more speculative, or it's a little bit less, it's more of like a nice to have, or like this seems interesting and would be cool versus like a need to have. And we see the biggest opportunity basically taking these markets that are functional in the West and making them globally accessible for the many, tens, hundreds of millions of people around the world who don't have access to these sort of highly functional liquid global markets. When you think about the most profitable businesses in crypto, they're stablecoin issuers. Circle and Tether are the two most high revenue generating companies in the space. And what they've built is basically this bridge from fiat that's working, US dollar people want access to, and giving people around the world access to it, making it sort of global and cross-border by default, and then also bringing all the benefits of blockchain from instant settlement, transparency, all of that, traceability. Our view is basically taking that, our view of what the opportunity set, the biggest opportunity set in the space right now, is taking that and then making it more real-time, more low latency, and extending it to new asset classes. We're not like a tokenization issuer. We have probably don't have time for this, but we think the tokenization opportunity makes more sense for asset managers. When you're talking about like a broader consumer base, what people really want is the ability to trade these assets. So I mean, that's sort of been our core thesis, and we see that validated through.
And we'll get to more of that in a moment from the consumer perspective. But Bart, let's talk about core banking.
Yeah.
Right.
How is it perceiving what's happening in digital asset market structure and how it's being integrated?
I think it makes perfect sense around the world. There's a definite need, and the U.S. dollar continues to be the strongest currency in the world. The question is, the United States, you have 9,000 companies and banks and credit unions providing the service already in a pretty efficient way. So the question is it needed here? And is the banking system that we have fulfilling the issue? So I think Clarity Act is really under attack right now, with really both sides kind of sitting in sort of firm positions, unwilling to budge at the moment. So I think there's no doubt that blockchain technology is the future. I think it depends on what kind of token or what kind of asset is going to be exchanged on that blockchain. Is it going to be tokenized deposits that kind of exist with legacy institution, or does it move into stable coins, which is really designed for outsiders outside the banking system to come into the system? So I think that's where the fundamental position sits in the US. And I think really at its core, it rests over the payment of interest.
Yeah.
And that is where the battle is drawn. And we'll see how that plays out. But at the moment, neither side is budging, despite some heavy prompting from the President of the United States. It's very in flux at the moment. So we'll see.
Constantine, couldn't both coexist, though? I mean, from a consumer perspective, we see how you can instantly transact. Why should we still have to wait 5 to 10 business days for money to be transferred from an external savings account to my core institution?
Well, I hope you understand from the name of our firm, Holistic Capital, I do believe in coexistence. That's our entire thesis. And I do think that we have to. There is no other choice. It's a natural evolution. And obviously, some banks and clearinghouses and other players in the market, they feel existential threats because, they're becoming redundant. Similar to, we were talking about it in 1997, like Merrill Lynch traders were taking like $70 a commission per trade. And now they're taking basis points, right? So 29 years ago, that's not that long time ago. So same happening, I think, this intermediation of a lot of people who are like redundant and the firms who are redundant. So think about it. Blockchain technology is better, faster, cheaper. I don't think there's a lot of questions like if it's going to become successful. The question is when. And I give you an example from a banking world. Scott Shai, who's the chairman of Signature Bank, former Signature Bank that was unfortunately slaughtered by the government, and I want to talk about it publicly, very sadly, and it was unjustified, but they're now building Next, which is the first forward banking. So they will directly basically clear any wires, and you will always see one-to-one what's happening in the bank. By the way, one of the biggest use cases is shipping companies. They need to, let's say, pay for the $50 million shipping cost, like just on Saturday or Sunday. They cannot do it in traditional banking. So stable coins is an incredible tool. And to the point of how they come back to U.S. economy, why it's very good for the dollar, because let's say Tether is the 6th biggest investor in U.S. Treasury bills. So I think the value circulates and actually helps the dollar because most of the stable coins are denominated in dollars.
Yeah, well, I mean, to Constantine's point, we've been through this before. We've seen how online trading platforms went from expensive in the office broker transactions to free at some points, and the capital markets businesses have evolved along with it. Could it just be the next iteration as an example?
Well, it is next iteration because it's just expanding the markets, because it's basically cheaper, faster, and better. It makes it less expensive. That means retail can trade, for instance, more openly. Before, if it cost $70, even if retail wanted to trade, it just wasn't feasible to do so. You see this already with people tokenizing mutual funds, for instance, where minimum prices have to be $500 per order. Now, once it's tokenized, you can actually sell it for maybe $10 or $20. So it gives a wider market access. But I think the one story that often isn't discussed is actually what is the really big growth opportunity here? And we don't think it's necessarily more humans trading on blockchain. We think it's agents, right? If you think about, the average question someone asks is, how many agents do you think you're going to have? Somewhere between 3 to 5. Some people say 10. People who use agents actually talk about hundreds of agents. Anyway, there's like 6 to 7 billion people online. That means we're going to have 30 to 50, maybe 100 billion agents online. They're going to be trading. They're going to be doing stuff. They're going to be transacting. What are they going to be transacting with? Blockchain-based assets, stable coins, tokens, crypto, right? I mean, they can't be KYC'd. They don't have a bank account. They don't have a PayPal. They're going to basically just have a wallet where they're going to be trading with each other. We see this already happening today. And that is basically where we think the big growth opportunity will happen. So it's going to be humans trading the way that they are, but there's literally going to be tens of billions of new agents that are going to be coming into the world, basically powered by blockchain and wallet technology.
Bart, you could see from a traditional banking perspective and understanding how agents would or could be regulated. We operate in a sector that is heavily regulated. There's no way to get around that at this point. And then when you throw in non-human identities such as agents.
Listen, I think that's where the banks really have an issue, is that, hey, we're happy to compete, but if we're going to compete, the newcomers have to be regulated just the way we are. But I think there's a big issue other than just saying, hey, we get a bunch of treasuries because people are buying stable coins in US denominations. There is an issue, and I think it's a real one, of what happens to lending. If there's disintermediation and deposits leave the banking system as it exists today, those deposits aren't necessarily being reinvested in the same way they are in banks, in lending throughout the country. That's not a small issue. It's not a lame issue. It's a real issue. I think I would not argue at all with the efficiency of stablecoin, the efficiency of blockchain, the efficiency of digitization. The question is, does that change our banking system to such an extent it has a significant downturn on our economy? And I think that's where the real argument is on the bank side. It's a protectionist argument for sure. Banks are asking for protection. They're saying we can be the only ones to have interest on deposits. We should be the ones that are lending. The structure as it exists, even if we change it and make it more technologically efficient, that system needs to remain in place. And I think that's not a small factor to think about.
But one would also argue, though, that basically if there's a lot more volume, more transaction, and there's more flow in the system, it should actually be better, broadly speaking, right? And certainly in parts of like Asia, think like the Philippines, I mean, you have such a large number of people that are completely unbanked. Basically, through this technology, they're actually becoming banked, not in a traditional way. Right. They basically have access, and it actually then helps the economy grow. And I think one of the things interesting about the stablecoin, and I do sort of warn our European friends sometimes about this, is you're going to become dollar colonized, whether this is a good or a bad thing, right? But the point being that this whole dollar colonization actually means the expansion of the dollar economy as well. Maybe that means banking services and applications and RWAs can extend to these markets. So that could be a market opportunity. Whereas if you're looking at it very protectionist, you're actually restricting yourself. And we saw what happened a few years ago when the administration was more hostile. All the innovation fled America. It went to the Middle East, it went to Asia, and it flourished because of that. And finally, the US is looking to reclaim ground in that area. So I think that's obviously the counter argument, I would say.
Yeah, and it's a little bit of a system that has about 20 banks that might be able to take advantage of what you're talking about, and 8,000 others that aren't going to be able to take advantage of it, are more regionally focused. And that's, I think, where there's a little bit of trouble with that.
Yeah, and you mentioned that as well in your notes, Kaledora, in terms of what's stalling adoption. It really comes around the transparency and pricing, opacity, and structural risk. I think part of it is just to understand and be educated in terms of how policymakers and traditional banks that just might not understand how this structure, could impact businesses and allow it to flourish in different types of ways.
Yeah, I mean, I think there's a way of looking at all this as just inevitable. Like better technology just proliferates. It's just kind of like that's like the thermodynamic law. Like this is like how things evolve. So I think whether or not, and obviously, as an American, I hope the US takes the charge in like leading the technology and making it a great place to build. A lot of DeFi builders left the United States and incorporated their companies elsewhere, even moved their entire team and themselves outside the country during, the last administration. So I hope we don't repeat that. But to a certain degree, I think all of this is like inevitable. And to echo what you were saying about agents, I don't think people have internalized this at all. Like this is clearly where the space is going. I think maybe one interesting downstream implication, just more broadly for markets, from what he was saying on the agent side, is a lot of businesses thrive on like the creation of friction and like leveraging kind of human cognitive quirks, and a lot of those are going to disappear in a world where agents and sort of agents that might can be set to optimize for just specifically doing things in the cheapest way possible. Basically, the quirks, either the sort of regulatory capture or psychological quirks that businesses rely on often to cement their dominance, will be eroded all the more quickly in a world where agents that can be set to purely optimize for cost will.
Constantin, you had mentioned before supply chain and global trade and payments and so forth.
Yeah.
We did a similar panel a couple of weeks ago specific to supply chain and global trade. You have agents set up within your system how are they communicating and using the same sort of governance structure across the universe, right? How do you square that circle, if you will?
Well, our firm is algorithmic trading, so obviously we thrive in volatility, and actually, the more inefficiencies in the market, the more margins are. So I have a on a way unbiased view, but if I will take my hat off, like as a trader,
Right.
like so we do have like 15 APIs to all the top exchanges, and I do believe that most other, like even traditional venues like Forex and RWAs, they will be interoperable. They will all be interconnected. We'll have the custody like of the banks or major players in the world that will allow us to, by the way, transfer the value from dollar to euro to yen to, like, that's already the technology is there. The question is if there is a political will. And I want to do shout out, like, I'm originally from Ukraine, so we have in Ukraine, by the way, there is a Ministry of Digital Transformation. So there's a lot of efforts being done, like a lot of projects on blockchain, the documents, the ID, like, and talking about the supply chain. Even if you want to send the donation for the families of orphans, like, that can be processed immediately from USDT or USDC into local currency. Think about the importance of that, just saving life on a weekend, as opposed to waiting 2-3 days for a wire transfer or the correspondent bank of JP Morgan in New York.
Right.
So how can you put this into perspective? Like, I do believe there is definitely a way to create the custody, the clearing, like, that will work within 2 minutes as opposed to 2-3 days.
Yeah. Well, I mean, we saw what happened when the Genius Act got passed. I mean, anecdotally, I can tell you, companies started reopening their New York offices. We started to see that talent come back. I was in Singapore when the election took place, and there was a collective change in the room because we knew the next administration would at least be open to talking about it and getting this legislation passed. So that's certainly one example. Again, I still think it comes back to understanding the infrastructure around it. Like the question I just asked Constantin, what if your agents are acting in a compliant way? What if all the agents do what algos do, where they just blow through, stops and price levels? Can that happen? I mean, could that impact liquidity in the markets?
I mean, certainly there are weaknesses that could emerge if you don't basically put the same kind of securities around it. That's true for any kind of technology. But I think what really agents do is they simplify things sort of tremendously. I mean, we've been basically dealing with MetaMask and wallets for the last maybe 7 to 8 years. And despite the fact that it is actually not difficult to use, humans still haven't adopted to them because it's just unfamiliar. It's just kind of weird, right? But you tell an agent, right? They're fine with cryptography. They're fine with hashes. They're fine with all that kind of stuff, right? You just literally talk to your agent, and they'll take care of the trade and do that kind of stuff for you. And that, to me, I think that's a great equalizer. I think what it also means is that, for instance, for trading, for instance, it means that agents are going to be able to sort of learn trades from others, right? Because you needed a certain kind of financial literacy and knowledge how to do certain things. And that actually becomes equalized as well. I mean, the early days of the internet, what it really brought was a democratization of information and knowledge. And it certainly democratized certain areas of knowledge, whether it's like media or just know-how or just broader education. But now financial knowledge, financial literacy is really the big unlock. And we're getting to a point where we have a very small number of people in the world who understand money. And with blockchain and with agentic finance, really, and what we like to call Web 4, we think the whole world will become much more financially literate, and that will completely reshape the industry, also increase liquidity tremendously.
So Bart, let me ask you a question. What should investors, and I would even say the general public, what should they be focused on when you're thinking about the impact of disruptive technologies such as AI? You could even use it around security. What should I know about security with these new products that are coming out? How do you get the public buy-in?
A lot of education. Interestingly enough, there was a survey done, and 70% of the banks were asked priorities for the next year. 70% said stablecoin was absolutely not a priority for the next year. You don't have this financial system engaged in getting their customers using digital technologies. I think it's a mistake. I just don't know that stablecoin per se is the right way to do it. I think a tokenized deposit framework can work in conjunction with stablecoin and can offer this best, fast, efficient system that you want, but can keep deposits in the banking system. Now, it doesn't solve the worldwide issue. You can't use tokenized deposits on a world stage. But I do think banks have to open their mind to this opportunity. It's an opportunity for them. Open their mind to it, start engaging in it, start investing in it. And then I think when banks, the financial intermediaries that we have today, begin to engage in that, I think customers and consumers begin to engage in it, merchants that are receiving payments through the banking system right now begin to engage with it. I think you have much broader adoption at that.
I mean, just quickly, one of the challenges I think is similar to the early days of the software industry, where you had closed software, then you had open source that just blew everything up. This is basically happening with banking, right? Because what is blockchain? Blockchain is essentially open source finance. Right? And it allows essentially even some 16-year-old kid to go make a prediction market because he can use the safety rails of the blockchain technology. He doesn't have to worry about custody, he doesn't worry about security. And
a blockchain's deterministic.
Exactly.
So the outcome is
and so you have suddenly the tools of a bank, but at the hands of everyone, right? That's both liberalizing, but also scary for the banks.
Yes, that's right.
Yeah,
that's right.
Yeah.
That's right.
All right. Appreciate everyone's insight. Thanks for joining us on Trade Talks. And thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.